May 22nd, 2025. And here's the market closing data for today. Welcome, everyone. This is the 44th episode of Finwell Daily Brief. Let's kick off with something, well, truly remarkable. India's household saving rate. It remains among the highest globally.
That's right.
We're talking about roughly 30% of household income flowing straight into savings. From our enduring love affair with gold, the reliability of fixed deposits, and increasingly, yes, the equity markets too.
It really does underscore the strong financial foundation many Indian households are building, and it sets the stage nicely for today's market action, doesn't it?
Absolutely. So let's unpack what happened today. The Nifty 50, as the dust settles, it closed at 24,637.7 points, or 0.71%.
Right, quite a dip, and that follows yesterday's gains, yeah.
Exactly. Makes you wonder, maybe some profit taking in the big names. But look, the Nifty Midcap 150 closed at 20,771.37. Down, yes, but only by 57.45 points. It's just 0.28%, much smaller.
Interesting. Less impact there. And wait for it, the Nifty Small Cap 250, it barely moved. Closed at 16,431.85, down a tiny 5.25 points, like 0.03%.
Wow, almost flat. That's quite resilient.
Right. And the Nifty Total Market Index, that landed at 12,724.10, down 62.80 points, about 0.5%. So it's a bit of a mixed bag, wouldn't you say?
Indeed. What really stands out is that divergence. The large caps dip noticeably, but mid and small caps show real resilience.
Yeah.
Could mean a couple of things. Maybe underlying confidence in those smaller companies, or perhaps specific sectors are just doing really well.
Good point. Need to look beyond the headline number.
Definitely crucial.
Okay, let's switch gears. Bond and currency markets also seeing some interesting moves.
What's happening there?
The 10-year Indian government bond yield, it's eased further, down to 6.25%.
6.25, that's low.
Lowest in over 3 years. Quite a slide. And the backdrop seems to be growing confidence, maybe from the ceasefire news with Pakistan.
Ah, yes. Geopolitical stability often does that. It reduces perceived risk.
Right.
So higher demand for bonds pushes those yields down.
Yeah.
And that links to the currency.
The rupee, how's it doing?
Well, it's trading around 85.9575 against the U.S. dollar, showing some slight appreciation, but more importantly, stabilization.
Stabilization, okay. That's good news for
foreign investors, exactly.
Yeah.
Makes Indian bonds more attractive, less currency fluctuation worries for them.
Got it. So stability is like a green light.
Pretty much. It helps draw them in.
Okay, now let's talk about something that's really grabbed attention today. Gold.
Ah, yes. Heard about that.
The price in India has just taken off. 24-karat gold is now at a staggering 97,910 per 10 grams.
Wow, 97,910.
And 22-karat is at 89,750. Now, just yesterday, 24K was around 89,300.
So that's a jump of
over 8,600 in a single day. That's, well, eye-popping.
It certainly is. Nearly 10% in one day for gold. That's remarkable. It often acts like a market barometer.
A safe haven, perhaps.
Exactly. When uncertainty ticks up or inflation worries surface, investors often flock to gold. This kind of surge suggests there might be some underlying anxiety driving that move.
Makes sense. Okay, let's dive into some of the top financial and economic news-making waves today.
Right.
First up, the RBI. They've made back-to-back repo rate cuts. This is after holding steady at 6.5% for a whole year.
Right. So they're easing policy now.
Yes. The repo rate, that's the rate banks borrow from the RBI. By lowering it, they're trying to make borrowing cheaper all around.
To stimulate the economy.
Pretty much. The goal is to halt the domestic growth slowdown, especially with inflation reported at a 6-year low. It's like a financial vitamin shot, you could say.
Should ease liquidity for banks, make financing easier.
That's the plan. Hopefully it gets businesses investing and consumer spending.
Well, these cuts are definitely a deliberate move to support activity. Lower borrowing costs should incentivize growth, but we'll need to see how quickly it translates on the ground.
True. And speaking of things that make you sit up and notice that gold price explosion we just mentioned.
Yeah, that 8,600 jump.
It's more than just a price change, isn't it? It feels like a potential signal. Are investors getting nervous about other assets, seeking safety?
It certainly looks like it. Like the market suddenly reaching for its golden parachute, as you put it earlier. It often reflects a reassessment of risk across the board.
Okay, another interesting story unfolding. Foreign investors, they seem to be warming up to Indian debt again.
Oh, yes. after the index inclusions.
Exactly. Inclusion in major indices like DBS and JP Morgan's, it's like India's on the must-have list now for global bond buyers.
That's significant.
And crucially, that rupee stability we talked about, it's playing a big role in this comeback. Reduces their currency risk.
Makes perfect sense. A stable rupee makes Indian debt much more appealing. Could mean stronger capital inflows ahead.
We hope so.
Yeah, those index inclusions are game changers. They put Indian debt on a much bigger map, combine that with the stable rupee, and you've got a compelling story.
Now, shifting back to equities, it wasn't all smooth sailing today. We saw a bit of a pullback.
Led by the heavyweights.
Yeah, stocks like Reliance Industries, ITC, they put some downward pressure on the main indices, a contrast to yesterday's positive close.
Well, that's the market for you, right? Bit of a roller coaster sometimes. Sentiment can shift quickly. Profit-taking after a rally is pretty normal.
Sure. Investors locking in gains from yesterday, maybe?
Quite possibly. Especially in those large, influential stocks.
But here's where the story gets really interesting again. While the giants stumbled a bit,
The mid and small caps.
showed some serious grit, a real David versus Goliath situation today. Much smaller declines in the Nifty Midcap 150 and Small Cap 250.
That resilience again.
And we even saw some standouts in the small cap space. Names like Godfrey Phillips, Keynes Tech, Garden Reach Shipbuilders, all reporting impressive quarterly profit growth year on year.
Strong fundamentals showing through, perhaps.
Seems like it. Like there's a pocket of real strength and dynamism there, even with the broader caution.
Yeah, it reinforces that idea, doesn't it? Different parts of the market, different drivers, company-specific strength, maybe domestic growth focus, supporting these names.
So putting it all together, what does this mean for you, the listener?
Well, it's kind of a complex picture right now.
It often is.
You've got the RBI rate cuts positive for equities medium term, aiming to boost the economy. But then today's broad decline suggests caution, profit-taking, global worries.
It really highlights why you shouldn't make knee-jerk reactions to just one day's movement. A long-term view aligned with your own goals is key.
Absolutely. And that dramatic gold surge, can't ignore it, could be an early sign of changing risk appetite, or maybe worries about future inflation.
It certainly prompts a review.
Might be a good time to look at your portfolio, right? Does your asset allocation still make sense? Maybe some rebalancing is needed.
Precisely. A big move in gold often makes investors check their diversification. Do you have the right mix of risk and safety for your situation? And on the flip side, the bond market, lower yields, returning foreign investors, could signal opportunities in fixed income.
Potentially, yes. And lower rates are generally good for sectors like real estate.
Consumer durables, banking.
Exactly. Those sectors often benefit from cheaper borrowing. So, areas to keep an eye on.
The lower yields also mean a lower cost of capital for businesses, which, could support investment down the line.
It's all interconnected. Understanding those links is important.
And let's not forget the mid and small caps. Their resilience today, plus those impressive long-term returns. Nifty Midcap 150 nearly 100% over 3 years, over 300% in 5.
Incredible numbers.
Coupled with strong growth reports from sectors like healthcare, Max Healthcare, Narayana Hrudayalaya Defense like Garden Reach, and some tech like Persistent Systems, Keynes Tech. It really makes you think, doesn't it? Are there specific sectors or companies there offering compelling opportunities for you right now?
It definitely underscores the value of looking beyond the large caps sometimes, doing that deeper dive into sector analysis, finding strong fundamentals.
So looking ahead, what should we all be watching? Upcoming corporate earnings, definitely.
Crucial for checking company health.
Monsoon progress, huge for agriculture and rural demand.
Always is.
And of course, global stuff, U.S. Fed policy, any geopolitical shifts, they can really ripple through our market.
Absolutely. Staying informed on both domestic and global fronts is essential for navigating this.
Okay, quick pause here because I want to ask you something important. Are you finding this daily breakdown helpful? Do you want clear, concise financial insights without the noise? Then you absolutely need to subscribe to Finwell Daily Brief. Get these crucial updates delivered every single day, cut through the clutter, and hey, for deeper dives, more discussion, and to connect with others, find SOS Finwell on LinkedIn. We're building a community there. Reach out. Seriously, subscribe today. Contact SOS Finwell on LinkedIn. You won't regret it. All right, back to our analysis. And this next bit is really important for protecting yourself as an investor. We need to talk about a manipulative practice called spoofing.
Yes, spoofing. Not good.
Not good at all. Imagine someone places a massive buy order for a stock. Makes it look like huge demand, right? Price starts moving up.
Others jump in.
Exactly. And then poof, that original large order gets canceled. The spoofer never meant to buy. They just wanted to create a false impression, manipulate the price, and maybe profit from their reaction.
It's like a mirage, as you said. Looks real, influences behavior, but isn't actually there. It's deceptive.
Thankfully, it's illegal here in India. SEBI is actively monitoring for this stuff.
What to know?
But how can you, the retail investor, protect yourself? Well, be super wary of sudden, dramatic price swings tied to unusually large orders that appear and then vanish really quickly from the order book.
See a huge order pop up and then disappear almost instantly, especially if the price jumps or drops right after.
That's a major red flag. If something seems too good to be true or the market action just feels off erratic, exercise extreme caution.
Vigilance and a healthy dose of skepticism are your best tools here. Knowing these tactics exist helps you avoid reacting to artificial signals.
Okay, so let's sum up today's Finwell Daily Brief. We saw, overall, a cautious market tone, selling pressure on the large caps.
But notable resilience in mid and small caps.
Right. We also have that supportive monetary policy backdrop, with bond yields falling.
And that significant, really dramatic jump in gold prices suggests potential shifts in asset allocation thinking.
Absolutely. So for you, the investor, the key takeaways are probably maintain diversification, keep a close watch on domestic indicators like earnings and the monsoon.
And keep an eye on global developments, too. It's a market requiring both vigilance and that long-term perspective we talked about.
Well said. Staying informed, staying adaptable. That's the key. And on that note, I want to leave you with a timeless piece of wisdom from the legendary Benjamin Graham. He said, "The investor's chief problem, and even his worst enemy, is likely to be himself. In the end, how your investments behave is much less important than how you behave."
Profound words indeed. Worth thinking about.
Absolutely. Thank you all for tuning in to Finwell Daily Brief. We'll be back tomorrow with more crucial financial insights for you.